Hello and welcome to Emerald Exchange, Orchestrated Intelligence, Decoded. I'm Richelle Carey. The core banking system is the heartbeat of every financial institution, the ledger of record, the engine behind every account opened, every loan funded, every payment cleared. For decades, that heartbeat is run on infrastructure built for a world that no longer exists. Today, the institutions that serve billions of people are asking a fundamental question. How do you modernize the most critical system in finance without stopping the heart? FIS is one of the world's leading financial technology companies, powering core banking for institutions across every tier, from global banks to community lenders. And right now, FIS is at the center of the most consequential shift in banking infrastructure really in a generation. Joining me as head of global banking, Peter Boyer. Peter, good to see you.
Good to see you too. Thanks for having me.
Absolutely. All right. So this is a heavy topic.
It is a heavy topic.
It is.
You literally called it the heartbeat.
It is, right? So banks have been talking about core modernization all the time, really. It's a never-ending topic, but something feels different this time, right? What do you think has changed in the urgency and the technology and the competitive pressure that may be different from other times the industry has talked about modernization?
Yeah, absolutely. I think first we have to expand the aperture of what it means to be the core system within a bank, right? You talked about it as the heartbeat, but the heart connects to veins and arteries, right? So that's where we really get to the orchestrated intelligence part, because that blood flow has to go to all the systems around it. So when you think about core modernization, you're actually expanding the aperture to bank modernization. You're really trying to accelerate the bank on their strategic goals, right? This time is really different for a few things. One, the banking industry is in a completely different place than it was 10 years ago. It is healthy, it is growing, it is vibrant. Number two, technology is changing all at the same time. Just think about where we were just 2 years ago with AI and where we are now with AI. It's a completely different ballgame. And we now in the banking industry understand what that can fundamentally unlock from an efficiency perspective and a growth perspective. And lastly, banks are willing to invest in really changing their system for the sake of fueling their strategy and their growth. You put all those two things together, the core modernization discussion has really amped up over the last few years.
So this core modernization dilemma often comes down to like this big, huge, big bang, or let's just ride it out and not do anything. Is there a different way? Does it have to be feast or famine, either or?
Yeah, the world isn't binary anymore. That's one of the great things that's been unlocked. There are the big bang approaches. Some banks will do that. There are the do nothing approaches. There are benefits and consequences of choosing that route too. I like to think and advise our clients to take a progressive modernization route, because the core is no longer a monolith. It is pieces and components that could really be pulled out of the monolithic stack and operate on their own. And what you could do is, working with the bank, understanding their goals, working with their technology and business leads, start to plot a path. And that path should have a series of technology implementations and changes, each one ending with a value drop. Something should change. And that way, over the series of 5 to 10 steps, you go on that 5-year journey, but you see value along the way. It's not about holding your breath for that 5-year moment where one Saturday something changes. You're really changing the experience for your customers and your associates all along the way.
And not change just for the sake of change?
It's not change for the sake. It's change for the sake of an outcome, and every step has a different outcome you're searching for.
Okay. Banks typically think about their core systems as something that is hard to replace. You've touched on this a little bit, but how should they be thinking about them differently, and what is the path there to shifting that thinking?
I think it's really sitting down with a company like FIS and understanding what is even in the core. It goes back to the componentry, where what are the goals you're solving for? Which components really feed that outcome? And then how much of a bite of the apple do you want to take at a time? So let me give you an example. So let's just think about fraud. Fraud's a rapidly growing concern for banks. AI is only going to further fuel and accelerate that. One of the biggest problems you have to attack when you're trying to develop a fraud defense is what we'll call the customer master. It is what says across the bank, Peter has all of these accounts. They actually belong to Peter, this human being, and here's everything you know about Peter. And the way you protect across fraud is across the entire customer journey. So you need to know where Peter's showing up in his digital channels, in a physical branch, when he's pulling money out from another financial institution, you always need to know that's Peter. That customer master is a single component. It's one of the most important components that lets you orchestrate the intelligence across. But that is a component that you could implement early in the journey if fraud is one of your biggest concerns, or you could do it later and you swap in something else.
Interesting that the data portrait that you just painted is such an intimate one when you know so much about your customers, but when you know that much about your customers, you're able to protect them more as well.
That's right.
FIS serves institutions of radically different sizes, right? Big ones, small ones, everything in between. How is the approach to modernization maybe fundamentally different depending on the size, or are there just some commonalities that should be there no matter what?
Yeah, I mean, first just acknowledging FIS is a fantastic institution. One of the things that drew me to this institution is we do serve banks of big and small, from the largest global banks to the smallest banks and credit unions on a street corner. That's something special, by the way. Like the country, the world needs banks of different sizes. What that positions FIS to do, though, is really learn from across and then abstract that to say, how do we make a common capability? What we're aspiring to now is not just developing capabilities for big banks and capabilities for small banks. It's really about how do you develop a common capability that can apply to clients no matter what products they have with FIS and regardless of their size. But I think where it gets a little trickier, the smaller a bank is, the more easy to consume you have to make those products because they don't have large engineering organizations to go manage that. And that's where FIS's size and scale allows us to really partner with them and supplement their teams to allow them to consume that and run that project really well.
I would imagine though some of your clients, depending, no matter the size, like we said, global bank or regional bank, they would probably be surprised how much they actually have in common when it comes to mindset, who they are, what they're trying to do. I mean, at the end of the day, they're all still trying to serve their community, regardless of what that community is, right?
That's absolutely right. Like every bank has a different value proposition way of acting, but the thing that's always constant, there is a human being on the other side. And no matter what product you have with what bank, they expect a certain level of service and commitment. At the end of the day, banking is still a relationship-based business. It's built off trust because you're trusting your bank with your money, your financial identity, and your future. Right.
So, and your family's future.
And your family's future, that's right.
All right, so we are seeing some of the world's largest financial institutions make these long-term, decades-plus commitments to core modernization for the first time, right? And you said some of them are aware this is going to involve money and investment, right? What is driving that conviction, and what does it tell you about where the industry believes there might be a competitive advantage to this, that they can either win or lose?
Yeah. It's a fantastic question. When you get down to why now, why right now, banks are really looking to solve for three things. One, the resiliency of their business, where in banking it's typically thought of like as their balance sheet, like how resilient are they? They are realizing the technology is also a resiliency piece for them. They always have to be on. There is no outages at night that consumers are willing to accept on their mobile app, as an example. How do you facilitate that? Expectations have changed. Number two, speed of product delivery, speed of changes. You know, I've launched over my career certain features and functionalities at many banks. The most sophisticated banks, for the example in my mind, they could launch those changes in 2 to 3 months. Other banks launch them in 1 to 2 years, the same functionality, because they've invested differently in their infrastructure. That creates a game changer for the bank that has. And number three, innovative value propositions. In a world where you have the biggest banks getting share, think your big four in the US as an example, you have these neobanks, these new types of institutions, like a Chime as an example, offering a competitive difference to their consumers. They're pulling for a certain side of the market. Each bank needs to determine and go after certain segments of the market, really declare what is their right to win. And then that gets backed up by a product play, a servicing play, which ultimately means that you need to innovate in that segment. Technology really accelerates that speed of innovation and removes the constraints of innovation that have historically been there. You sprinkle in a little bit of the AI piece and everything is just turbocharged nowadays. You could code faster, you could release faster, you could test faster, you could create the most innovative products in the world now. That creates competitive advantage, also competitive disadvantage if they aren't investing in it.
Absolutely. So if you are just joining us, this is the Emerald Exchange, and I'm Richelle Carey. I'm with Peter Boyer, the head of global banking at FIS, and we're exploring what it actually takes to modernize the infrastructure that banks run on. Really one of the biggest challenges of our time, honestly. So banks, when we talk about all this modernization, investment, change, banks do want to reduce costs as well. Where can they start with that? Where can they keep that in mind with all of this modernization?
Yeah. So at first, I think it's really important to talk about what does cost mean?
Okay.
I think the way we define that actually is a little different nowadays, or it should be different. So when we typically think about costs, like just think about our household, right? What is the cost of that box of cereal? What is the cost of milk? In a bank, it's what is the cost of the core? What is the cost of the digital app? What is the cost of your ACH movement product? Those still are true. They are costs, right? But there's also all this cost around them. People to manage them, the cost of change management, the cost of maintenance. All those things go into a total cost of ownership model. That's where I think the thinking needs to change. What is the total cost of ownership of your whole ecosystem? And how does modernization change that total cost? So if you think differently about that, let's take a product like the core, right? There's always new things coming out. There's always new updates to happen. You need full resiliency on that solution. Today, if a system goes down, there's a human being that has to go in and triage that. There's a human being that has to go and fix that. With AI, you could deploy autonomous SREs that go on top, that are proactively looking for weaknesses and vulnerabilities in your system, going back and fixing those. The cost of a core may get slightly more expensive, but if it has the autonomous SREs, the total cost of ownership goes down because you don't have to have all those ancillary teams working together to go manage that solution. So as we go through the modernization journey, it's important to really broaden our picture. We're not replacing a product. We are modernizing an ecosystem, and that ecosystem has a cost, and you have to work backwards from how to modernize that.
It seems like that's like a little switch that when it flips in someone's brain, it really can make this transition maybe less anxiety inducing when you think about it the way that you put it. Okay. All right. So if you are a CIO, Peter, and it is time for this modernization journey and you're a bit behind, where would you tell them to even start?
My answer is always work backwards from your strategy.
Okay.
Every bank is different, whether you're big or small, more retail focused, more commercial focused, more wealth focused. You have to think back from what is your strategy and find those main points of leverage to go on a progressive modernization journey that drops value, shows your management team, not just the CIO, but the business side, the presidents, the CEOs, exactly why that investment accelerates the entire business. And then number two, you need to find a trusted partner. FIS being one example of those, right? So FIS does three things amazingly well. Number one, we're a trusted advisor to the industry. We have helped banks around the world, big and small, modernize their stack, done thousands and thousands of implementations. We know how to do that. That is domain knowledge that you can't just get from a startup. Number two, you have to find an institution that's willing to invest with you as an institution to upgrade and maintain the products you have, but also to really take that next step to develop new products. So you have to have scale of investment in. And number three, you have to have a partner that's willing to really be bold and innovate. Hang out that shingle and figure out where's the bleeding edge, because we have the ability to peek around the corner to see where the industry is going, not just with AI, but with different business models, and then take those innovation steps in partnership with the banks, not on our own. That is why FIS is great, and really a great partner to these institutions.
Have you found that some of the banks that are not navigating this transition as well, maybe they are trying to go it alone, maybe they are not really in the right partnership with the right people and right companies to get them to that next level? Is that where you see some of the weaknesses?
Yeah, I think there is some struggles there. I think there's also, there's a breadth of vision point in the industry, because you have monoline technology companies. They think they focus on one vertical or one product. And you have companies like FS who really span multiple domains. And at the end of the day, the bank doesn't run in verticals. It actually runs across in a connected, orchestrated ecosystem. My advice is to find partners on their modernization journey that know how to work across an ecosystem, not just in a vertical stack. And by the way, companies like FIS, we know those vertical stacks and can connect them into the ecosystem.
Okay, wonderful. So let's wrap it up with this. What does, as you see it, what does winning actually look like when it comes to bank modernization that is forever evolving? If you're doing it right, if you're winning, how do you see that?
Two words come to mind: confidence and velocity. So confidence. In the progressive modernization journey, every step you take should release value. Every time you release value, you should get more confident about the direction. You should also get confident because you're learning and you might want to course correct along the way. And then two, that velocity point, as you get more confidence, you get the ability and confidence to run faster. Every release should go faster and faster, and you should be running by the end to the innovative journey that you're looking to unlock.
That's really good. That's good life advice too.
It is good life advice. I should take that life advice one day.
That's pretty good, Peter. I like that. Peter, thank you so much for this conversation.
Thank you very much. Thanks for having me.
Okay, we have been speaking with Peter Boyer, the head of global banking at FIS, to explore more of the forces reshaping financial services and how the world's leading institutions are responding. Join me for more episodes of Emerald Exchange, and thank you for being with us.